could change in 2018. The arrival of Bitcoin futures will see Bitcoin exchange-traded funds enter the stock market. The currency, which still remains highly volatile, could really shake up every stock market it enters. Japan, where 50% of all Bitcoin trading occurs, will see the biggest impact.
Good morning, you're watching All You Need to Know on BloombergQuint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. I'll talk about the general trade setup. And the setup at this point of time looks decent on the equity side, not so much on the commodity side. The SGX Nifty is indicating an uptick of almost 20 points, so probably the 10,500 mark is something that we can anticipate in opening today. Apart from it, the ADRs had a bad day. Vedanta was the only ADR that ended with a positive bias. Apart from it, Dr. Reddy's, Tata Motors, Infosys, all of them were down in trade. Crude, a big jump that came in overnight. Crude was up almost 2% overnight. WTI jumps above the $61.50 barrel per mark. Brent is trading and it hits the $68 barrel per mark. So there is enough traction that's happening on the crude market. As far as OPEC is concerned, they've held coal crude production steady, and that is why prices have been able to sustain at these levels. As far as commodities are concerned, week closed by base metals on LME except for lead. All the commodities were down in trade, be it aluminium or nickel. The other commodities that were down in trade were copper, tin and zinc. Lead was the only one which was up close to almost 0.5% in trade. Even China, the opening has been rather weak. Weak start by commodities in China. Look at rubber, look at steel, look at aluminium. All of them are trading with a negative bias. Even copper is trading with a negative bias. As far as gold is concerned, even gold has traded lower for the second trading session. So commodities as a pack, apart from crude, is not having a good day. As far as flows are concerned, FIs bought in almost 96 crores in the cash market. DIs remain net sellers. They've sold in over 269 crores in the cash market yesterday. What is happening on a month-to-date basis? On a month-to-date basis, FIs were net buyers to the 608 crores. But look at the DI sell figure, almost 1,500 crores of net selling. So on a consolidated basis, we are negative for the month. What did well yesterday? Metals and FMCG stocks did well in trade. The broader markets did manage to outperform. The mid caps, the small caps did better than the benchmark indices. And auto and pharma were the two sectors which did not do well. As far as the Nifty is concerned, it was up just 1 point. What contributed? ICICI, L&T and Reliance were the ones that contributed on the positive side, while HDFC Bank, Maruti Suzuki and Infosys contributed on the negative side. But Agam, what are the FNOQs indicating?
Well, Darshan, it's flat Qs. As you can see, the Nifty hasn't really moved too much. In fact, it's absolutely flat, virtually no change, with 3.5% increase in open interest. And it's the same for the Nifty Bank. While the index remains unchanged, we have seen a substantial increase as far as this open interest is concerned at around 14%. The VIX also remains largely unchanged at around 13.6, just a cut of around 0.5%, which also means that the Nifty put call ratio is around the same levels at around 1.48 now. In terms of the changes in open interest that we've seen yesterday, again, activity remained restricted, but we saw some amount coming in around, building up of positions in the 10,500 calls and puts out there. We saw Fortis Healthcare move back into the FNO ban, and other than that, we're watching out for Jet Airways, which saw a 90% increase in open interest towards longs, and similarly Bata India, which saw nearly 18% increase in open interest towards longs. So we'll be watching out for these counters. There could be some unwinding or perhaps an extension of gains going forward. But that's as far as the Indian markets go. Well, the Federal Reserve officials expect reduction in corporate and personal taxes to boost consumer and business spending, though they remain unsure of the impact of the new tax law, according to the minutes released on Wednesday from their December meeting. Bloomberg's Steve Matthews highlights all the details in this report.
The Fed is 100% behind gradual rate hikes, which suggests that March is not a done deal, but March is very likely for the next rate hike. So if you remember back in December, there were two dissents against the December rate hike. Charles Evans, the Chicago Fed president, Kashkari, the Minneapolis Fed president. And there was a sense among the people in the market and some economists that maybe maybe that's just the tip of the iceberg. Maybe those two dissents represented a big portion of the FOMC reluctant to go further with rate hikes, even though the center of the committee seemed to be for more hikes. And when you got these minutes, they very much showed that those two are very isolated, and that very much the bulk of the committee is full speed ahead for more rate hikes. So that was the way it was read by the market. You know, there were lots of details. They see the labor market heating up. They're very much of the belief that inflation is going to rise, even though it's been under target for a number of years. So they were pretty hawkish overall.
Back to local equity markets, we are tracking Navkar Corporation as a stock of the day today on the back of Ashish Kacholia buying in 0.7% stake in this counter. 10 lakh shares have been bought at a price of 187 per share to the value of 18.7 odd crore. You also have Everest Finance and Investment Company picking up the similar quantum in the company. It has purchased 0.7% stake in the company. If you look at the shareholding pattern, that's given the latest shareholding pattern available on BSE. Promoters hold as much as 69% stake in the company, whereas the public shareholding is to the tune of 31%. Just to give you a rundown of what the company exactly is, it's a container freight operator with a market capitalization of more than 3,000 odd crore. It doesn't pay dividend despite the regular profits that it has been seeing. And if you look at the ROE, that has also remained low at 8.06% over the last 3 years. And in terms of stock performance, well, the stock has been buzzing in the past 1 month. It has gained around 11% as compared to 19% gain that it has seen for the year, and for the week itself it's up by 7 odd %. With that, let's toss it over to Jayesh for commodity market update.
Thanks, Nikki, for that. Commodity space is showing mixed cues. Crude is doing rather well, but not so much for the base metals and the precious metals. Let me start off with the crude oil prices, which actually surged 2% overnight, and WTI crossed above the 61 mark. Now, this is on the back of some positive news coming in from the United States, wherein the API is likely to report an inventory decline to the tune of 5 million barrels for last week. And also, we understand that OPEC's crude production for the month of December has been steady. As per a Bloomberg survey, OPEC nations pumped in as much as 32.5 million barrels each day for the month of December. Moving on to the precious metal space, gold has actually posted its first decline in about 9 days. Now, Fed minutes show that there is a high likelihood of interest rate hike, which has actually aided the dollar index, and it has climbed above the 92 level mark. As far as base metals are concerned, the base metal index on the London Metal Exchange declined 1%, and this was the third straight day of decline that we saw for the index itself. And similar cues can be seen on the Shanghai Futures Exchange, where most of the base metals are trading lower. As far as individual metals are concerned, copper closed down about 1.6% and saw a 3-day decline. So did aluminium, which was also down about 1.6%. On the other hand, zinc, nickel and tin also fell, while lead was the only exception which gained in trade. As far as steel futures are concerned on Shanghai Futures Exchange, we are seeing about a 1% downtick for steel as well. But let's shift focus to the currency space. Saluna, the cues that are picking up.
So talking about Indian rupee, it snapped its 4-day winning streak yesterday and ended marginally lower by 5 paise at 63.53 levels against the dollar. Now, heavy capital inflows from foreign investors as well as large corporates supported the rupees, largely limited the rupee's fall. On the global front, Asian currencies were trading higher, with Thai baht and Indonesian rupiah gaining the most, while the dollar index rallied above the 92 mark yesterday on upbeat US manufacturing and construction data, and also after the release of FOMC minutes, which indicated that the central bank is still on track to raise interest rates several times this year. Well, dollar snapped a 3-week losing streak against euro and yen after the release of Fed minutes, and mind you, dollar index posted its largest daily gains in over 2 weeks yesterday. Now, traders do remain cautious ahead of the release of non-farm payroll data, which is scheduled for tomorrow. Now, coming back home, dollar rupee is trading showing flat in the non-deliverable forward market, which indicates a flat opening for Indian rupee in today's trade. Moving on to bond market, the 10-year benchmark yields ended 6 basis points lower at 7.32%, and mind you, yields touched an intraday high of 7.42%, its highest level since July 2016. Well, global funds reduced their debt portfolio yesterday for the third consecutive session. They reduced their portfolio by close to 600 crore according to NSDL data.
Morning. The bunch of stocks that we're tracking today includes first in the likes of HPCL. There, ONGC is looking to may pay a sum of around 45,000 for 51% stake in HPCL, which is almost a 45% higher than the current marketization. Separately, ONGC may also tap the loan market to raise around 25,000 crore to fund this kind of acquisition. Also, Tata Motors, second in the list, we have Tata Motors. There you have the JLR sales, which has come down 9% in this month to around 11,000 odd units, a little more than 11,000 odd units which have been sold for the month. For the year, it is up by 9% though. Next in the list, we have Allahabad Bank. There, RBI has put the bank under a prompt corrective action, given that the inspection that the RBI held revealed high NPA and also negative return on assets for 2 consecutive years. Also, Jayaprakash Associates is a counter that we'll keep an eye out on, because RBI has put an insolvency proceeding on hold for this counter. This is an ET exclusive, and this is possibly to avoid the legal complications after Supreme Court has barred the promoters for selling or transferring stake in the company. SGVN is the other stock on our radar today. The board is going to be considering a buyback on Jan 8. Orenpro Solution, again a small company, is planning to, the subsidiary might sell its identity and access management business to KPMG in an all-cash deal for a sum of around 217 odd crore. That's a small number that we're looking at for this counter. In bulk deals, we would like to keep an eye out on Arrow Granite, where there you have Dilip Kumar Lakhi, which has bought in 1% stake in the counter, so you might just see a positive reaction out there. And WPIL company is another counter on our radar. There the promoter has actually bought in more 1% stake in this counter. Also, we like to keep an eye out on S-Chan. There you have the company meeting bunch of fund houses that includes the like of Sundaram Finance, Sundaram Mutual Fund, and Franklin Templeton for that matter.
Out of the 67 lakh beneficiaries who would receive farm loan waiver in Maharashtra, the government expects around 7 lakh beneficiaries could be ineligible to receive this waiver. So from our sources, what we understand is that the government has already cleared 49 lakh beneficiaries, but however, it is unclear about the remaining 20 lakh beneficiaries. So after this second round of revision, the total figure for the beneficiaries could fall somewhere around 60 lakh. Now remember, the government had announced farm loan waiver in Maharashtra for 89 lakh farmers, which amounted to 34,000 crore rupees. However, only 67 lakh farmers actually applied. We also understand that so far government has given loan waiver to around 28 lakh beneficiaries amounting to 12,000 crore, and it has already disbursed 23,000 crore for the 49 lakh beneficiaries. So after this total revision, the total farm loan waiver figure could fall anywhere around 25,000 crore or 27,000 crore.
Well, among other stocks to track, first up we have Phoenix Mills, which was down nearly 3% yesterday and saw delivery selling of almost 50 crores. The delivery volume spiked nearly 5 times at about 8 lakh shares as compared to its 10-day average, and the total volume was up nearly 4 times at about 8.1 lakh shares as compared to its 10-day average. ILNFS Transport Network, the other stock to watch out for, a smaller stock, but it was up 14% yesterday and saw delivery buying in excess of 20 crores. The delivery volume more than doubled at about 22 lakh shares as compared to its 5-day average, and the total volume spiked nearly 4 times at 80 lakh shares as compared to its 5-day average. Lupin, the other stock to watch out for, well, it ended up only 0.4% but saw delivery buying of nearly 300 crores. The delivery volume more than doubled at about 34 lakh shares as compared to its 5-day average, and the total volume spiked 72% at about 41 lakh shares as compared to its 5-day average.
And the big brokerages first we have is Equirus Securities on FIM Industries. Now they have initiated coverage in the stock with a long rating and a target price of 1,336. Now FIM Industries is the second largest player in the Indian automotive lighting market and will be a key beneficiary to shift to LED usage in two-wheelers, as the company derives around 90% of its revenues from sales to two-wheelers. Now effective automatic headlamp on regulation will fuel the LED usage in two-wheelers going forward, according to the brokerage. Also, LED lamps would drive strong value growth and lower competition in this market will aid the return on invested capital for the company. The company also has a strong record for adding new products which could work in favor for the company going forward. Also going forward, the brokerage is expecting the company's margin and return profile to rebound after a blip in financial year 2017. Now they're expecting the return on invested capital to expand to 13% by financial year 2020, and they're expecting the company's revenue, net profit, EBITDA and net profit to grow at a compounded annual growth rate of 18%, 21% and 33% over FY18 to FY20. Second we have is Equirus Securities on Lumax Industries. Now they have initiated coverage on the stock with a long rating and target price of 2,486. Now Lumax Industries is a market leader in automotive lighting market in India with 35% market share and will be a key beneficiary of shift to LED usage in two-wheelers and four-wheelers both. Now, the company derives around 68% of its revenue from four-wheelers while the remaining 32% comes from two-wheelers. Now the company is also focusing on increasing in market shares in commercial vehicles, tractors and two-wheelers, which bodes well for the company. Now the brokerage is expecting the company to gain share in Hero Motors lighting sourcing, and also the company has a large exposure to Maruti, which provides a good growth visibility for the company, as Maruti recently introduced LED in mid and premium segment of its cars. Now the return metrics of the company is expected to improve on the back of growth and margin expansion. Also the brokerage is expecting the company's revenue, EBITDA and net profit to grow at a compounded annual growth rate of 15%, 24% and 27% over FY18 to FY20.
गाँव में जो हमारे बौद्ध बांधव है उनके ऊपर जो हल्ला मानवता ने जो हल्ला किया है, उनके निषेधार्थ हम लोग ये मोर्चा निकाल रहे हैं, मार्च निकाल रहे हैं और उसका निषेध हम लोग शांति से कर रहे हैं, किसी को तकलीफ नहीं दे रही है।
सिर्फ वही नॉर्मल रूटीन हिल जाता है, ट्रैवलिंग खराब हो जाता है, नॉर्मल टाइम पे ऑफिस नहीं पहुंच जाते हैं, लेट हो जाता है ऑफिस में डेली रूटीन में, तो डेली रूटीन ऐसे ही हिल जाता है पूरा।
ये गलत है, ऐसा नहीं होना चाहिए, प्रोटेस्ट होना चाहिए, कोई अगर इशू है तो बड़ा पीसफुली होना चाहिए। ऐसे लाइफ डिस्ट्रप्शन करके प्रॉपर्टी और ये जो बस व्हीकल ये सब डिस्ट्रक्शन करके कुछ फ़ायदा नहीं है, इससे कुछ मिलने वाला नहीं है।
Today's band has been withdrawn by us. Along with me is Ashok Kacholia of CPM, then Prakash Reddy of CPI, and the 250 organizations that we have. And on behalf of them, we are announcing that the band call which we have given is being withdrawn today.
त्या चौकशीत जी काही घटनाक्रम आहे त्याच्यात जे कोणी दोषी असतील त्यांच्यावर कारवाई केली जाईल। त्याच्या व्यतिरिक्त संपूर्ण घटनाक्रम किंवा त्याचे फुटेजेस हे पाहणं चाललेलं आहे। त्या फुटेजेसमध्ये किंवा तिथल्या घटनाक्रमात जे कोणी दोषी असतील त्या सगळ्यांवर कारवाई ही निश्चितपणे केली जाणार आहे, कोणालाही सोडलं जाणार नाही।
The last bit of that was the Maharashtra Chief Minister speaking in Marathi. In case you don't know what he said, he's essentially saying that the footage of whatever happened over the course of the last few days in Mumbai and rest of Maharashtra will be viewed, and those perpetrators, so-called, will be brought to justice. But moving on now, Israeli arms firm Rafael has confirmed that India has cancelled a $500 million deal to develop Spike anti-tank guided missiles. The company has also expressed regret over the decision. The Indian Defence Ministry has been strongly pushing for the transfer of technology in procuring various weapons and other platforms from foreign defence majors as part of its broad policy initiative to encourage domestic defence industry. The company in a statement said that the cancellation was made prior to the signing of the contract, but did not give a reason for the cancellation. However, it expressed interest and commitment to cooperate with India's Defence Ministry in the future. This comes just 3 days ahead of Israel's Prime Minister Netanyahu's first visit to India. And the matter is likely to be discussed during this visit. Rafael's CEO will also be accompanying the Israeli Prime Minister. Now, India is adding the least amount of coal-fired power capacity in more than a decade. Tepid demand from distribution companies have led to overcapacity across the country, and the plant load factor across fossil fuel-based plants has been way below the average in previous years. But the Power Secretary Ajay Kumar Bhalla says that he expects some pickup in demand in the coming years and that losses of discoms are coming down. Listen in.
5 to 6% growth is there, and we are forecasting for our next five years growth of 6 to 7%. November generally is a low demand month in the winter times. December onwards the demand starts picking up. So November little lower growth is not a matter of worry.
Slightly nearer term, sir, because one tends to judge overall economic activity or at least industrial activity with the demand of power. Nearer term, have you seen a pickup or anything that would suggest that industrial activity is sort of reviving a little bit from previous levels?
It has. About 5% growth is there in this year up to November.
Okay. And no worries in terms of discoms being able to pick up power, sir?
Yeah. Not as of now. See, whenever as of the peak rated capacity, see, we are not falling short of any generation side. If the demand picks up in the coming months as the core sector is growing, and we expect industrial activity, especially in steel, aluminium, cement sector coming up, so further downstream industries definitely will also pick up, and exports also are growing. So we expect the power demand to increase. If you have seen in recent times, the PLF on an average has gone up. In last 2 months, it is on an increase.
What are we averaging, sir, from the numbers that you have PLF, say over the last 3 months, and what you would expect it to move towards?
See, it is started growing beyond 57-58% now, touching 59%. Whereas this is an average, whereas the NTPC average is all plus 79%.
When do you expect us to move to higher PLF levels? So what is the outlook in terms of PLF for the next year or two? Because that's a critical area in terms of power sector profitability. And as we've seen, it has been a difficult few years for the power sector. Joining this is also the question of some of the power assets that are currently in the NCLT or insolvency process, and your view on that and what that means for the sector.
See, as I said, pithead plants, the power PLF factor is definitely much higher than other plants. NTPC pithead plants will be much more. Average is 79 to 80% touching now. So PLF is on and up. Of course, it varies from the state to state. Some of the older plants, capacities have been retired. About 7,000 megawatts have been retired. 3,000 more is in the pipeline. And accordingly, new capacities will be definitely getting market demand. As far as stressed assets are concerned, matter has been reviewed, and each plant has a different treatment to be given. Somewhere the bankers are looking at change of ownership, somewhere they are restructuring the debts, and somewhere where there is nothing much has come on the ground, definitely the bankers have already gone to the NCLT. So different attempts are being made to revive some of these assets in a manner best possible.
So last year there was, a plan being discussed, or at least we'd heard there was a plan being discussed that there would be sort of a central role in these power assets, either an SPV getting created or NTPC taking over operations of some of these plants. Nothing came out of that, sir. Has that been sort of put on hold?
As I said, each asset is on a different footing. Some are commissioned plants, some are yet to be, some units are commissioned, some are not. Some have a coal problem. So in Shakti auction, about 6 to 7 plants have availed that benefit. So those definitely will get into pipeline and start generating by maybe February end or so, once the coal starts flowing. Some of them do not have PPAs. So for that we are working on a model that we can aggregate some power. NTPC has brought out an NIT asking for any plant on a asset-based model to be taken over if at certain basic price of, let's say, 3 to 4 crore rupees per megawatt. So they have not yet received any response, though many people have downloaded the document. So we are looking at that, whether some plants would be interested in selling their assets to the NTPC.
Now, just a short while from now, you'll find all the live market action right here on BloombergQuint Live. But there are also a few stories that you should consider reading on the website at BloombergQuint.com. First up, India may have to give freer rein to the rupee this year to avoid triggering US accusations that it is manipulating the currency to support exports. The Reserve Bank of India has already exceeded a key threshold that is monitored by the US on how much it can intervene to curb the rupee's gains. That's according to Nomura Holdings. Exporters like ONGC stand to gain as India plans to incentivize oil producers that use costlier methods like injecting gas or liquid into fossil fuel reserves to boost output. The draft policy released by the Directorate General of Hydrocarbons suggests up to 50% waiver in oil cess and up to 10% higher wellhead prices for production using enhanced oil recovery for up to 10 years. Let's now listen in to Siddharth Sidani of Anand Rathi and Hadrian Mendonca of IIFL on their top stock picks.
Markets, we are looking for a pre-budget rally before the budget. Of course, it is in well shape. Stock specific one has to approach, and I think wherever the results, our expectations are strong, I think those stocks will be on the move before the result season opens. So be stock specific. And one stock which I would like to put across, as we have discussed about Phillips Carbon and graphite as a cyclical play, one more stock cyclical which is there in our radar and our buy recommendation is MOIL. MOIL India looks very interesting from here on. 335 is our target. We believe they have increased their ore prices also. They're one of the product EMD, they have increased their prices by 7.5%. Capacities are going to double in next 2 years. MOIL India in the cyclical play looks very interesting from here on with a target of 335.
I'd rather stick to the stocks that are outside the index, and in fact NB Ventures is looking pretty impressive of this move. On the weekly charts as well, this very strong breakout has come already, and I think it is also convincingly sustaining above it. So I'd go with an NB Ventures, not a BTHC kind of a trade, but a short-term kind of a trade, because projections are indicating targets of 175 to 180 is on the cards. So short-term traders can go for an NB Ventures from here on.
Well, that's all you need to know at the start of your day. Indian Open is up next to take you through market opening. Thanks for watching. This is BloombergQuint.